What's happening, traders? I want to show you a trade that I took last week on the 20th, which was actually on the day of the FOMC announcement, which led to a £200 profit day on the trade, which was really, really good. And I was in the trade 3 hours before the FOMC announcement, right? So let's just get into the daily chart, which is my higher time frame view, my perspective, just to get a big picture view on what's currently happening in the market. So here we have a contraction, expansion, mitigation trend. Within that contraction, expansion, mitigation trend, we have another contraction, expansion, mitigation, and trend. So let's go to the M30 time frame so we can actually take a look at the entry. And I've been testing the M10, which I found is a bit too small a time frame. So I'm also going to be testing the M30 and the M15 because I want to get my execution time frame perfect, because that's where I'm spending most of my time, right? So if we can see here, this move down that led to this mitigation is this move here on the M30, right? So now I'm looking at the M30, understanding that we have hit a daily area of demand, which we're going to potentially mitigate out from and move to the upside, right? And what we have here is a doji candle, which is a representation of a sideways range. So if you went down to a smaller time frame, you'll see the market just flitting across sideways. So what we have here is our expansion, and then we have our mitigation, which came in on the 20th of March, right? So I don't know if this zone is actually going to work out, right? So the idea is to then go down to a smaller time frame and see the same pattern play out again, right? So for me, let's just open this up a little bit so you can actually see it. For me, this smaller time frame, but again, you know what? The reason why I'm taking this trade is we can see here, this is actually an internal strong and this is an internal weak, right? So if we looked at this without a higher time frame perspective, I'd probably be going short right now, right? But I'm aware that the daily is just hitting an area of demand, so that's why I'm going long, right? So always having that higher time frame perspective, I think, is important. Sometimes it can dilute the trade depending on what the higher time frame is doing, but right now we're focusing on the higher time frame and then go down to the lower time frame to play the pattern and execute. So you can see here that it's mitigated out of this zone, and so we need to go down to a smaller time frame to see the same pattern again. Where are we? Okay, so here we are. We have the same pattern play out again. We have contraction, we have expansion, we have mitigation, and then it goes into our trend, right? And yes, I know it's a ridiculous R&R of 33 to 1. This doesn't happen on a usual basis. It's not my usual R&R. I usually go for like a 10, around a 10 R&R to make things simple and keep things consistent, as I am a student of the RMAC boys, and a 10 series or probability set keeps things simple, keeps things exact, keeps things continuing in a continuing format. So therefore that you know what you're doing over a series of trades and how that looks after a set of 10, right? So something I want you to take a look at as well, even on the M2 time frame, that could have got a lot of you into this trade without necessarily losing your shirt in this particular trade. As you can see, like I was in this trade at 140, right, and the news came out at around, what was it, I guess 5 o'clock, right? So if we look at this from an M2 perspective, what have we got here? We've got a contraction, right? Then we have a contraction, we have expansion. What's going on here? Okay, that dot isn't moving, no problem. And then we've got a mitigation, and then we've got a trend, right? So even if you wanted to trade the news, you could still have done that, and you could have done it in a really safe way by just playing the same pattern, right? We've got a contraction, expansion, mitigation trend. Yes, you probably have to do it on the M2 because it wouldn't show you this level of detail on the 15 or the M30. So you'd have to go down to the smaller time frame, but you could have still played this trade extremely safely, playing the same pattern, just on a smaller time frame, and you would have come out with a decent R&R, right? So if we actually go into this trade, and let's just move this up, and we took this whole range, right, which is 9 pips, could have easily come out for a 5-to-1, which is a good R&R. That used to be my typical R&R. Yeah, I reckon a 5-to-1 would have been a great R&R. And that's after the news, right? So that worked out really, really well. Let's get that way. Let's go back to the M30. And that's where that £200 trade came in, right? Playing the same pattern, just looking at the market in a very simplistic format, making sure that we're using the daily time frame for a higher time frame perspective, so we get an understanding of what's going on there, because it makes everything downstream much easier. As I said, if I was just only looking at the M30, I probably would have got this trade all messed up. I'll probably be looking at this range here and looking to play this all the way back to the downside. But having a higher time frame perspective saves me in this particular instance, right? So if we take a look at the market right now, let's just take a quick look at where we're at. So here we are currently. We are looking at we've got an internal strong here because it led to this break of structure, and we've got an internal weak area here as well, right? But if we go to the daily time frame, you can also see that this is broken here. This is this low is this low here, right? And we're back into this range structure again to another area of mitigation, right? Now, yeah, it could potentially go lower, right? But at the moment, we've got this daily level in command, and right now, daily is in command. We've got break of structure to the upside. We've got this daily area that held. We have not broken below this daily contraction area yet, and this strong low is still holding. So officially, we are still in an uptrend unless this low breaks, right? So yes, I am in a trade here, and I will go into this trade in another video just to demonstrate what happens, whether win or loses. But there has been a few opportunities. I've got into an opportunity right here on the lower time frame. I think I got into this on the M2, but there is still potential opportunities with this trade here as well to get into it. We have an opportunity here. We've got a range and initiation, mitigation, and here as well we have a range, initiation, mitigation, and trend. So I guess we just have to wait and see. It could potentially fail because we've got really good momentum to the downside, and this strong low could break and turn into a weak low. We just have to see what the market does, right? So it's not a focus on anticipating what's going on. It's just simply watching the market, looking at your zones, making sure they're in good locations, and then playing the market and playing the pattern every single time, making sure that you're consistent with it and just let it play out. I'll see you in the next video.